Today, folks, it has been a damn minute since I've updated you on the sin stocks yielding up to 11 damn percent that all them dividend influencers have been pushing on their community, which I think is a great detriment because if you are a younger investor, this is not a prudent investment for you. But if you are an older investor, if you're looking for dividend income, I'm going to share with you one of these two stocks we're going to analyze, what one I think is the best between British American Tobacco and Altria Group. And if that is a conversation you'd appreciate, damn it, just consider hitting that like button because Altria has been really attracting investors as of recently. The stock's up almost 10%. If you locked in the 9% yield at the beginning of the year, you've seen a pretty healthy rate of return. But however, the long-term investor has been feeling a lot of pain because this stock has wiped out almost a decade of capital gains. Like, it's a shame that this is the way the smoking sector has gone, but it's a fact of reality that people are starting to smoke less and less, especially in the Western world. And this is why there's a good comparable between Altria and British American Tobacco, because BTI is servicing more of a European, Asian community, whereas Altria is primarily just focused in the US. Now, the dividends are what attract a lot of investors as of recent, going from 48 cents to almost $1, well, doubling the dividend in the last decade. If you take a look at the dividend scorecard, the growth rate's not incredible, but with the high starting yield, to get a 4% growth rate is pretty healthy. Now, you look at the revenue and you think to yourself, wow, this company looks stable. Their revenues aren't really growing, but they're not really declining either. I mean, we're seeing about 20 billion pretty consistently since 2020, and gross profit is slightly increasing, which means they're cutting costs to increase their bottom line. This is what a lot of people are like, oh, this is good for income. I can get my total rate of return from income. Pretty nice balance sheet until you start looking deeper into it, which is why I don't understand people are so bullish on it when they have more debt than they do assets. 42 billion in liabilities versus 38 billion. It wasn't always this way, folks. The farther you go back, the more and more this company had positive liabilities, which isn't a good sign for the company. They have been able to increase earnings primarily by buying shares back. I mean, they've been just manipulating shareholders as much as they can to kind of keep investment money coming in. And I don't know, I don't think it's a good thing. Now, their profit margins are very healthy at 41%, which is quite impressive, which just shows that there's still a huge amount of profitability in cigarettes. And I'm shocked at how high institutional ownership has been. Now, MO has had a long history of negativity. When they tried to get into Juul, they ended up liquidating and completely writing that business off. They tried to get into the MJ markets, and they made some major investments in Canadian MJ stocks that completely got devastated. And through the whole time, management was giving themselves raises. Kind of reminds me of what's going on with Boeing CEO right now. If you haven't seen those videos, go watch them. They're mind-blowing. I hate that CEOs continually get raises against the backdrop of a lack of good stock performance. I think all stocks should operate with their CEOs in the way of, if the stock does well and shareholders make money, then you make money, because that's pretty much how it worked with Elon Musk. It's a shame that most of the markets don't actually work that way, but we can see, if you look at the total smokable products that make up the vast majority of MO's earnings. And it's important to note that MO is primarily, again, focused on the US, that there is a massive decline in the amount of people that have been smoking. So this is smokable products reported shipment volume sticks in the millions. So literally, forget revenues, forget earnings, just the amount of people buying cigarettes. They are down 10% on a year-over-year basis. We are now in double-digit declines for smokers pretty much in the US, and the way they keep up with, making the revenue look good is by increasing the prices against the backdrop of a declining rate of people smoking. Hell, even cigars, surprisingly, are down 6.1%. Total smokable products are down 9.9%. If you continue to see a 10% decline year over year within a decade, it's very likely this company is going to see a lot of issues. Some growing aspects of their business here. I mean, look at Marlboro makes up 42% of the cigarette retail share. Kind of interesting. But if you take a look here and you scroll down, you might see some of their other products. Like, they do have oral tobacco, which surprisingly is also starting to decline. I find that rather intriguing as well, because this was a growing segment for them for a little while. I can't find anything good about this company from their actual products. So you need to be hyper aware of this if you're buying it, because they don't really have an expansive product into the vapor sector or the non-combustible sector. They failed at every step trying to get into it, and they're seeing a double-digit decline, and it's eventually going to hit this there's going to be a crossing line where the revenues are just, they're not going to be able to increase the cost enough to justify the decline. So let's compare it to British American Tobacco, however, which I was recently just in Europe. I went to Italy and Turkey, and there is an incredible amount of people that vape and smoke. And I really feel like British American Tobacco has a much better foothold, especially in the Asian economies when it comes to vaping. With currently a yield of 11%, the stock did wipe out a huge amount of gains. I mean, it's down 56%. It continues to decline, but again, is up this year, which looked pretty attractive if you were able to pick up some of the dips. The dividend, however, being a lot more volatile recently, as of the mid-teens, they did a stock split. They used to pay basically twice a year to now basically paying quarterly, doing what they can to attract investors. Obviously, if we take a look at their balance sheet here, which with British American Tobacco is, I think, in a much better place than MO is. We can see they actually have an increase in revenue, so from 25 billion to 27 billion. That's nice to see. However, gross profit hasn't been keeping up as nicely. It's only increased slightly. From the balance sheet perspective, we're talking about 118 billion in assets, 65 billion in liabilities. Way better off than MO, and it looks like they're actually paying down their liabilities with that extra profit. Great to see. Both these companies are doing share buybacks. If we take a look at the statistics, we can see that their profit margins for the last year not that great. Operating margins not so bad. These companies tend to do pretty well. There's a high margin on cigarettes. This one has like literally no institutional ownership, which means it is primarily held just by retail, which is kind of impressive, and the payout ratio is actually a lot lower than MO's at only 59%. The more we dive into these, you'll see some similarities when it comes to the, basically the combustibles, not declining actually as much as the U.S. We can see total combustibles are only down 5.5% on a year over year, which in volume is intriguing, right? Which just shows you that the European and Asian countries are not quitting smoking at the same rate, however, still seeing a decline in the rate of sales of that. However, when you take a look at the new categories, we're seeing some really healthy growth. At some points, their modern oral pouches are growing at a 34% clip, which is insane. You take a look at their vapor products are up 7%, in some cases double digits. They're doing quite well on their other categories where people are moving to instead of smoking, so that's really nice to see. And again, if you take a look at their recent summary here, nothing too incredible. Like, again, they're not growing revenue at an insane clip, but they are sitting in a much better position, in my opinion, than MO is. And they're trading at a much better valuation for the growth that you're getting. So I find it impressive that Altria actually trades at a higher market cap value than British American does. But obviously, I would take the higher yield from BTI than I would over MO, and I would only really be buying these stocks if I was in a place of retirement, if I needed cash flow today, and I would definitely be avoiding the U.S. markets where MO is primarily locked. You could also look at obviously Philip Morris. There's a lot of other SIN stocks to analyze, but these are probably the two of the most popular right now, and I'll pass the question off to you. I'd love to know what you think about these companies in that comment section below.